What is going on, everyone? Welcome back to another episode of the NJ Show. I hope everybody's doing well. Really sorry about FOMC yesterday. Couldn't quite make it, but I'm sure everybody enjoyed the World Cup. Finals, semi-finals were pretty intense yesterday. Pretty sad for Morocco, but it is what it is. How is it going, everyone? I hope you're all doing well. Make sure you get your comments in. Yes, we have two very, very special guests today. ISO came on a couple of weeks ago, maybe a month or so ago, and it was an absolute crazy turnout. We had a great episode, and it was good to see a different perspective coming from ISO. Now today, we don't just have ISO, we have ISO and we have Zoran as well. Now Zoran is somebody that I've respected for a number of years now in the space. He's got a really good grip of how to look at the market, what he looks for specifically when he's looking at the market. He's got his own strategy. We're not going to reveal everything today, but it would be good for him to come and give us his perspective on where he thinks the market is going and whether or not it aligns with our perspectives, with ISO's perspectives, and maybe anybody else that we respect and love. Now, the main question I've got always is whether or not Bitcoin will return, whether or not this bull market will return. We'll see if we can get them on and discuss that now. But make sure you're getting your comments in. Make sure you're showing some love to ISO and Trip. To ISO Trip. Two people, I'm sorry. Make sure you're showing love to ISO and Zoran because they're doing a big madness for us today. They're taking time out to come on this show and speak to us. So look, without further ado, I'm not going to bore everybody. Let's bring them in. Zoran, ISO, how you guys doing?
Hey, NJ, thanks for having us, man. It's great to be here.
Good, man. Just observing the carnage after yesterday.
Yeah, awesome stuff. Awesome
JP's
stuff.
hammer.
Say that again, bro.
I said observing the carnage after JP's hammer. Came out pretty hawkish.
Yeah. We got another 50 basis point increase yesterday. That's a great place to start the questions. If I'm honest with you, this 50 basis point increase, is that bullish or bearish?
I mean, I think my personal opinion is like if you step back and you just look at the technical side of things and you look at the chart, I think there's a trend line that everyone's watching, right? I mean, it's very close to the 200-day moving average. And if you look at, how this market, let's just take ES, for example, has respected these levels and how the bounces have occurred. They're, back into key fib points. They're back into diagonal resistance. And they've followed largely, the biggest bear market rallies being around 19 to 20%. And that happened back in basically June, right? And then we rallied for, let's just do it quick here, 60 days, okay? So that was a 2-month rally. Now, you want me to share my screen?
Yeah, go for it. Go for it. We're getting straight into the action. Notice everybody in the chat. Notice how we didn't even say hello properly. We went straight into the action when it comes to
business here.
We're all business.
Straight to business.
Okay, yeah. So I mean, I think like everyone has this chart. So if we go back to June here, and we look at where we topped, 43.20, that's about a 19% move. And if you take, what was the time span? It was 60 days. So if you look here, 61 days, 2 months. And what do? We rallied, oh shit, wrong one. Always get these tools messed up. I always, when I come on these streams, it's just on the fly because that's how I do my best analysis. So look, it's almost identical. The markets don't repeat, they rhyme. This is crazy. But here's your fake out right here, right? And so why did we move up here was in anticipation of a lower CPI print in July. And it was also because there was like this risk window where we weren't going to hear from the Fed. If you paid attention to the commentary down here, it was, largely Fed officials talking about not necessarily pausing or lowering rates, but maybe like a wait and see game. I think people looked at this at a technical level of 3,500. I mean, it is like basically the 50% Fibonacci of the whole move. I bet I draw my fibs backwards like I always do. Hold on. Let's see here. Yeah. Right? Like, it's pretty clean. right? So it's respecting key levels. And so this rally to me was consecutive lower CPI prints and the expectation of 50 basis points from the Fed. And the interesting thing was, like, last time Powell spoke, his tone and dialogue was like cool and collected, and I think it obviously gave this very bullish sentiment to the market with his language. And then, the other day or yesterday, it was basically like higher for longer, and there's no real indication that we're going to be lowering rates anytime soon. They're going to basically remain data dependent, and so we're a prisoner to the Fed, even though people are like, they don't know what they're doing, but that's basically what dictates markets at this point, monetary policy, right? So yes, we've had two low prints in inflation. There's still aspects of the market that they want to see, obviously, in relation to looking at thinking about lower rates, which is obviously the employment and housing sectors. That's been a focus. But if you're just a chart trader, all that aside, like these are like well-respected levels. Now you're trading back under this. You're trading back under the 200-day moving average. This is under 50 and the 100-day. So it looks likely that we're going to go test this 50-day around 38.60. Risk assets get sold. You could look at the dollar. It obviously hit support. I mean, come up with any sort of combined narrative you want, but like how that puts pressure on crypto going forward is it doesn't seem as attractive. And we just traded really good range in crypto. Like, it was great. And I'll probably pass it to Zoran on that, because I had been slaying altcoins, and he'd come back to the market and really nailed some of these Bitcoin and Ethereum trades, low time frame using liquidity theory, which was obviously something that I talked about at length last video. And it's
I would
good
love
to see
to
him
see. I'd love
back
to
in
see
the
what
game
Zoran
doing
has
that.
to say on it. Yeah.
Yeah, guys. So yeah, coming back, first of all, thanks for having me again. Coming back to the market the last month and a half, I checked out over the summer, got super shredded, took care of my physical and mental health, and I came back here now. The markets are what I believe entering that final accumulation zone. I don't think we're there yet, and I'm happy to talk about that. But now that we kind of moved our way up into FOMC, when I see 9 billion in longs on high block kind of coming in as we're going into the range high, and here, let me share my screen to give you kind of a little perspective on that. So yeah, we had this insane bid from 16,850, which came off like this opening drive from the past week. I think it was here. And we had this build up. We just had this insane move up into range high. And again, this is the range I've been looking at over the past couple of weeks. We've been in it for a good amount of time. Probably what, like 2 months, 3 months, 2 months, about
Like
about a what month?
40
Sorry.
days.
Yeah. 40 days, yeah. Not enough for an echo bubble, and I'll get into that after.
Yeah.
But we had this run up to range high. I had this thesis when I came back in November, is that we're going to consolidate in this 15, 18K range. We'll deviate above this high, SC's favorite word, deviation, and then we're going to kind of do the Bitcoin downtrend meta, which to me is, you set a range, you have the range low here, you have the range high here, you run the range low, okay, we ran it, you run the range high, okay, and what happens after that? Downtrend continuation. So, this is kind of exaggerated, but point being is I think this range that we've been in is going to eventually break down. It's not going to happen before the end of the year. I do think we're going to have a lot of prolonged sideways. What I do expect here is if this 17.5, 17.6-ish level doesn't hold on a probably 4-6 hour basis, we're probably going to go back to the previous weekly open that had some strength at like 16.4-ish, just below mid-range. Probably get a dead cat somewhere up to the low 17s, and then again, I'm looking at like this consolidation zone right around 15.8, just below 16. That's kind of be the higher low to this deviation that will probably get a dead cat bounce. So when I'm looking at these markets, especially the last couple of weeks since the whole FTX debacle, liquidity has thinned up. A lot of the market makers have just noped the fuck out. And the key here is that, with the lack of liquidity and the lack of market making in the space, the moves are going to take a lot longer to play out. What we're actually seeing is the death of volatility in real time, in my opinion. So like, yeah, we've been in this, $3,000 range, whatever it is. But all the moves that everyone's expecting are just taking so slow to play out. And I think that's the point, right? Like, we're chopping everyone up to death. I personally, like, have been lately thinking that I wanted to swing short from this level. Actually, I had this set up from, I think, November. Where like I wanted to see this deviation, get a retest of the range high, and then like short it back down to new lows, which I think is like the 10, 12K range. So if we get more, macro and talk about, NJ, is there going to be another bull market? I absolutely do think we will eventually have what I like to call, what other previous participants like to call the echo bubble thesis, which is basically such an absurd amount of money was made last cycle that, there's an echo that comes about when all the forced buyers have capitulated, or sorry, forced sellers have capitulated, and then there's new speculative buyers coming into the space and saying, okay, how can I make generational wealth, right? So when we think about it, like, how does that happen? Well, I think it happens over a longer period of time where we have a base form. So when I zoom out really and just look at what Bitcoin has done lately. So we've been in this range for like 30 days, right? 40 days. And this previous range was like 2-3 months. I believe it was. And like we broke down from this range. So when you break down from this range, I don't necessarily think that I'm bullish. Like if we did a reclaim from this 17.6 level, that's why like my invalidation would be holding 17.5, 17.6. Okay, we can argue this might have been a deviation below. But personally, I really think, you can argue the FTX, if it hadn't happened, we'd be at 20K or whatever. But like the truth is we broke from this huge 140-day range. This is the retest of that range low. Basically, in my opinion, we're deviating in this mini range. And then again, I still see us going much lower. So if I zoom out, and I like to always go back to XO and SD's, teachings in that respect, is like they always like to use the monthly levels. Like if you look at a monthly level for Bitcoin, like the first support I really see here is this monthly candle, which is 10 to 12K. This is the first zone, in my opinion, where I'd get extremely bullish. So I don't think we're in the echo bubble yet, unfortunately. What I do want to see, though, is that this current range breaks down however long it takes. Maybe it's mid-January, February. We eventually break down to this 10, 12K zone. And then I want us to go sideways. Sideways for a good, 90 days at least, possibly even 150. Basically, I want to see a base form from which at support, like a high time frame monthly support, and from there we can have this echo bubble that we want, right? And that echo bubble, unfortunately, if we do the 10 to 12 range, let's just theorize, we'll probably have an echo bubble to like just shy of 28, 33K, somewhere like this. This high time frame level, there's a CME gap at 28K. I have marked in my alert system that if I have it marked as my alert system that fill CME gap, sell more spot just in case, quote unquote. So yeah, in this situation, looking forward, I'm excited because coming back to the market now, as we've had a year of selling, just tells me that like the time to pay attention is now. And I kind of want to check back into the market when other people are checking out. So yeah, moving forward, let's see what happens over the next couple of weeks. I'm kind of excited to trade this range until it breaks down, right? Trade the range until it breaks down.
So much information that you just dropped there, bro. Absolutely fantastic. So there's there's a lot to go into here.
Unpack
All
it.
right.
Back it up. You tell me.
All right. So look, number one, I've got this theory, right? And I call it, it doesn't actually have a name, but I call it the market cycle theory, where markets go up for a year, they go down for a year, and then they accumulate for a year. Now, what I really love about the analysis that you gave there was you're looking for that macro bottom. And I think that is where a lot of people are getting confused. A lot of people are looking at the chart and they're saying, oh, well, Bitcoin has dumped, 80%, 90%, or whatever it is. It can't continue to go more. And going further downwards, it doesn't make any sense. Oh, why is Bitcoin not going up? But what does a macro bottom look like? Now, you spoke about going sideways for maybe 90 to 150 days, and that lines up perfectly with what I think too. But what would you expect a macro bottom to look like? I think you just brought it up. I think you just
Yeah,
put
so
it.
exactly. I've kind of had this thesis, right? Is like you want to see some sort of seller's capitulation. Again, it doesn't have to be a V bottom, but there are a few signs that I've always looked at, and this is based on my experience from previous cycles, especially last cycle, 2017, where a lot of the meta, edge, alpha, whatever word you want to use to describe it, was using BitMEX indicators. So one of the biggest things I've always looked at is the futures backwardation as a good sign of a potential local bottom. So, right now, if we look at the BitMEX tickers, right? So like December is trading $30 below. because it is December. March is trading $100 below, and June is trading $200 below. So this spread between the perpetual and the June futures is just not wide enough. So at one point it was like 800 before December, but especially now it's only $200-300. So what I want to see now, going back to it, is I want to see some sort of blowout wick, whether it's like $1,000, $800, probably $1,200 if we get down to this 10 to 12K region. I want to see the perpetual spot, whatever you want to call it, trading around 12K, but I want to see futures wick down to like nearly 10K, right? Like that blowout spread to me is going to signal, all right, market makers got blown out there. Yeah, you can argue that a lot of that edge is gone and the market has matured in a different way. And I do agree with that wholeheartedly. But I do think that there is value in looking at these backwardation on futures and seeing when the kind of market spreads out, blows out, and says, all right, the futures are being priced in at such a heavy discount. This just doesn't make sense. There's a mispricing in the two assets. I'm going to take a nibble here and punt along, right? So the biggest thing I want to see is some sort of backwardation discount. And then once we kind of get in this zone, right, like I want to see prolonged negative funding. I want to see all these perpetual apes shorting into high time frame monthly support and just building up liquidity for this echo bubble rally. So yeah, those are the two biggest things I'm looking for.
So do you know what? I want. There is a lot that I want to say, but you've mentioned something there that I think the audience in general wants to know. Now, I'm sorry we can't see the comments on the side. Usually, we can see the comments from everybody coming in, but for some reason, it's not working today. Make sure everybody's smashing up a like. By the way, we've got nearly 100 people here, and we've got 18 likes. So everybody needs to get off their chair and smash a like there, bro. You mentioned the echo bubble. Now, the echo bubble is something that we've not heard on this show before. And ISO, I haven't forgotten about you, bro. We're definitely going to get to you in just a moment regarding all of this stuff because
No,
I know
I'm
it's been a
learning,
while.
man. We're good. I'm learning.
Yeah, same. Me too. Me too. But Zoran, could you give us a bit more of an understanding into this echo bubble? And when I say a bit more of an understanding, I don't mean from an academic perspective, but I mean more so from a Bitcoin bull market perspective, if you know what I mean.
Absolutely. So yeah, you talk about cycle theory. I believe in whatever name you want to give it, that Bitcoin and crypto as a whole operate on this 40-year fundamental cycle driven by the halvening, right? Bitcoin block reward halves every 4 years on average. So what you tend to see over a long enough period of time is, Bitcoin has these boom and bust cycles where it'll go up a crazy amount and then it'll basically mean revert to the point of breakout or just slightly above it. And this usually ends up being like a 70 to 87% retrace, depending on what year of the cycle you're looking at. So the echo bubble thesis kind of came about after Mt. Gox, that there so much money was made and then we had such a long prolonged period of sideways that people just wanted any excuse to kind of make more money again. So come fast forward to 2017, we had our top at 20K, right? What happened then? We had the 6K triangle break. We accumulated in this 3K zone for about 90 days or so, 115 days, I believe it was. And then we had this echo bubble, right? So from a psychological perspective, what we're looking at is the real time of buyers and sellers, speculators in the market who got blown out in this area, who now believe that, it's going lower, it's going to zero. But the truth is it's not. And because of that, you have a whole large buildup of short positions in this zone, that you have a short squeeze, which was this first Soros candle. I remember this vividly on like April Fool's. It was like an April Fool's Day joke. We went from like 3.5K to 4.2K, so some 30-40% move. And then we had this trend, right? So we had this trend, which ended up being a lower high to the previous all-time high. So from a psychological perspective, the echo bubble is essentially a lower high parabolic move coming off a previous parabola. So kind of break it down for you. We had from 20K, we went from 3K to then 13K, just shy of 14K. And that's the echo bubble. It was this, let's say we broke out on the 1st of April, we had about 90 days of bull market, right? So it was a short period of time. But I know a handful of traders still around to this day who made a fuck ton of money, made it all back and some, trading this echo bubble. So I have a lot of hope, because when you do engage in this echo bubble, it gives you the ability to kind of make back your losses, make back everything that happened, not in one trade necessarily, but it provides you the conditions for up only for a certain sustained period of time. It's not a long period of time. So you can't get fooled into, okay, well, we have this echo bubble let's just pretend we're at 25K from 10K, we're up 2.5x, we're going to the moon. I disagree. I strongly disagree, especially when we start hearing those type of comments. And if that's just going to be a high time frame lower high or a high time frame SR level, I don't want to necessarily stick in. I want to make my money here to here and start getting out here, right? Obviously, who doesn't? And you're going to probably ask me, well, how do you play this echo bubble, right? So the way that I've played in the past, and I think for most of your viewers who are not necessarily, who may be scalpers, but who might do better not managing or managing less on their positions, the best way that I have done it is bet big, bet early, and walk away. And that's just the truth of it, right? Like you take risk, you bet early in the beginning of a trend. And then as the trend progresses, you start taking money off the table. A lot of people, especially newer participants, it might be their first or second cycle, they'll start adding risk. Like, oh, right, we're up 2x from the lows. Okay, now's the time to start adding risk. And that's just not the way to play, in my opinion. You want to load up early and start taking your profits as the trend progresses, and you have confirmation, yes, this is an echo bubble. Great, but as with all echo bubbles, they pop. And that's the point.
You know what? That mind-boggling, mind-blown. I want to ask more. Just a quick one before I move over to ISO. Now, I know a lot of people are going to be in the chat right now, and I know what I'd be thinking if I was watching this particular video 2 years, 3 years, maybe 4 years ago. I would be thinking, well, yeah, all right, you know what, Zoran, he puts a lot of time on TradingView. He puts a lot of time in the charts. He clearly has an understanding of the market, but and I probably can't do that, so therefore I'm going to walk away from this. But you mentioned quite a few things there that got me thinking. Did you ride any of the altcoins in the 2021 cycle out of interest?
I fumbled a hell of a lot of bags, if I'm being completely honest. I did a lot of my trading doing just Bitcoin and Ethereum.
Okay, so you're telling me that even though you're a trader, even though that you have your rules and your risk, everything's defined, you still aggressively accelerated on altcoins when the market gave you the opportunity to do so.
Absolutely.
Okay, so I guess when it comes to talking about bull markets, then maybe I need to restructure my question. Maybe I'm not saying is there going to be another Bitcoin bull market, but is there going to be another period of time where money floods into altcoins?
Absolutely, right? And that's the whole cycle. Like before, we used to chart alt BTC charts. No one charted alt USD charts. You didn't chart that. You traded Bitcoin. The theory was this. This was before, and again, it took me a while to kind of swallow this myself. Is all altcoins were scams back last cycle. None of them did anything that they said they were going to do. They were all just vaporware. So you traded altcoins to accumulate more Bitcoin. That was the standard. You charted against Bitcoin because if you weren't beating the Bitcoin, you might as well stay in cash, or you might as well stay in Bitcoin if you weren't beating the standard. So yeah, there will definitely be a period of time, and this is just a natural cycle of flow of money, in my opinion, especially in crypto. It goes from dollars to Bitcoin, Bitcoin to major caps, the high caps they're going to call them, and then those trickle down into the smaller, lower caps, and even the shitcoins, right? So yeah, we will definitely see that period. It doesn't necessarily have to happen, for example, when prices bottom here, and it probably won't actually. The risk on period is once Bitcoin kind of breaks that bearish market structure from a long consolidation period, this is probably when altcoins start moving. So Bitcoin has its move and it's maybe consolidating. So if you actually, which interesting, if you go back to the 2017 cycle or 2019 cycle, it's during this consolidation phase that I remember vividly altcoins started moving. So Bitcoin is still trending up, but this was like the signal. All right, prices are reaccumulating here. Alts start flying. And then as Bitcoin goes up, alts pull back, which give you another nice entry into alts. And again, it's kind of like a push and pull take from altcoins to Bitcoin.
Are you guys enjoying having Zoran on the show? Do you see what I mean?
Zoran and I talk on the phone like every single day for hours, basically, and we're like, man, people just probably want to eavesdrop in on these conversations. So this is basically what our phone conversations are.
Do you see? The truth is a massive shout out to Crypto ISO. So Zoran, I've always admired Zoran, but it's always been very difficult getting his attention. He's always focused on the markets, but having a friend like Crypto ISO, having a brother in that kind of circle, ISO was the one who actually managed to get Zoran on, and you can imagine how excited I was when that happened. So make sure you guys keep the comments coming in. I can't fully see the comments, but I can see everybody's showing love for Zoran in the chat. Let's move over to a little bit of ISO now to get some of the same feels, but in a different way. So look, ISO, Zoran has said a lot. We've spoken about the echo bubble. We've spoken about the concept of a macro bottom. We've spoken about being aggressive in altcoins when the market allows you to be aggressive on altcoins. Now, moving over to you, the last time you came on the show, we had a conversation about Bitcoin and where the macro bottom could potentially start forming. And you had some answers during then. I want to know, has anything changed since then? Do you still think the 10 to 12K region is a region that Bitcoin would be looking to revisit for a potential macro bottom, or do you think higher or lower? What are your thoughts?
I mean, my thoughts haven't changed that much because there hasn't really been a lot that's changed from a macro standpoint, whether people want to believe it or not. Like, it's just
Hmm.
the reality of the situation is we're in the same spot. We're waiting to see what happens, and people are not willing to invest in risk long term. They use it as short term trades. And like we opened the show with how the ES has traded, and it's your quintessential bear market rally when the
Yep.
market sees it fit, right? So knowing that, it's simple as if the allocation is not going into risk assets like tech is being hammered, trades very much alongside crypto, like less liquidity in the system, you're not going to have a huge uh, bull market or participation in crypto, unless there's some new narrative that I don't know about.
Yeah. Yeah.
But so no, like it hasn't changed at all. And when I came on the show, like, we talked about sushi and that was an insanely good coin to trade.
Mm.
Um, but, the volatility in those altcoins and liquidity theory, even with these delta buildups, because they were basically trading in a range and they all got to the top of the range, and everyone tried to short it up to the top of the range and it just kept going higher. Like, it was tricky. Longing this stuff now and has been really bad because it seems like there's more spot selling than there is on the derivative sides of pushing it up, right? And so you had some negative funding rates on some of those coins lower down when I first came on the show, which give you that extra impulse up when you're getting those delta reversals on shorts being squeezed. But like we haven't necessarily seen that in some instances. Over the past weeks, funding rates have actually been positive on these coins. So it's the altcoin market to me, like I haven't been doing much, right? One thing I try to tell myself and realize is that you're going to have like some really hot times trading, right? You can smash it, and the market has to be there to do it. And over the last couple of weeks, I've tried to long a couple things, and like, yes, I have a stop loss, but I will cut that shit so early on a 15-minute chart because it looks like crap. And it's just like the sell pressure was there, and you dumb it down to we were at a range low, we went to a range high, and so I think it's a very similar instance with Bitcoin,
Do
Ethereum
you
right
reckon?
now.
Do you reckon we could get your screen up if that would be cool? Maybe we could get your screen up and see what you're looking at, if that's all right.
Yeah, actually, what I was looking at was pertaining to the echo bubble thing because, hold on a second, just gauging. Well, I was looking at two things. I was looking at the
Okay.
Bitcoin difficulty adjustment levels, which is something that
Bitcoin difficulty adjustment levels. Interesting. Interesting. You did this last time, ISO. You came on the show and you dropped like 10 different keywords and everybody was just mind blasted. And I think that's why the show was so big. And you've done it again now instantly. So tell us a little bit about this, what we're looking at here, because I've never seen this before.
This is big. I just want to say before he gets into it that, I'm pretty good at picking bottoms, but ISA's really good at picking tops. And I remember vividly him literally
Yeah.
in Crypto Insider saying this is the top at 13K because of this is one of the biggest reasons. So yeah, get into it.
Yeah, 100%. ISO. I've seen ISO in action before.
You have like minor capitulation, right? So the higher the difficulty level, and I'm no expert in this, but this is just something like on a surface level analysis. Like higher the difficulty level, it's it's harder to mine Bitcoin, right? So there's more participants in the market mining, and that basically makes it more expensive. Like it puts pressure on miners. So when you get steep drops in difficulty adjustments, like look at around June, July 2021, that means, whether that's minor capitulation, I don't know what it is, there's less people mining Bitcoin. Maybe it becomes more attractive as an asset in that regard alone. And so then, and I'll get back to this. Where was that? Well, it was like this. It was this section here, pretty much, June, July. And guess what? You can call it like maybe there's a coincidence there. I mean, sure, yes, it matches up with a technical level on basically holding this, and then we went on a massive run, right? And so this is a super big drop, like almost 28%, and then it just started to basically go up from there. So one thing, and this is like kind of no, it wasn't when I went into crypto insiders. I did come back to the market in March 2019, but one thing that I was looking at was during the phase down here, right? Or no, this whole thing was not only was there negative funding and shorts building up, but there were signs of minor capitulation down here and difficulty adjustment levels. So fundamental reasons, there was technical reasons, and there was also sentiment reasons. So basically futures and backwardation. So it all started to line up. And then I wanted to go back to Zoran's point about the echo bubble, right? Because like, and his point, and we very much agree on this, is like, look at the time spent down here that was the buildup, right? Like, this is not really any time, to be honest. Like, this is the go to sleep phase, and you get all those things.
100%. It's not a macro bottom, and that's what a lot of people seem to. That's where a lot of people seem to get confused. Albeit, I think in 2018, I was getting confused by the same things. I'd see price drop, I'd think that's the bottom, and it wasn't the bottom. It would keep going lower. It was only once price went sideways for a certain period of time that I was able to see, oh, that's what a macro bottom looks like. And I'm glad you're touching this. Please continue.
Yeah, and so like you can kind of, this is altcoins, this is every asset, right? And one of my targets originally was like around this zone, like not only matches up with here, but like Fibonacci's are super powerful, and like look where this shit topped, like 61.8. That was like, if that is your echo bubble move, right, then maybe don't go that high. But like the reality is like, if this goes down 85%, like other corrections, right, that's 10-1. Your echo bubble move would be like up to here if it were to mimic this. Maybe it only goes to like the 50% Fibonacci, or maybe it goes to the 38.2. The point is that if you know that you're getting this and you're seeing those things, maybe it's in the mining data, maybe it's in what Zoran talked about, or just technical kind of consolidation building a base, then you can get on the train somewhat late and still get a lot of upside, right? Like this move, everyone tried to fade because of this 6K thing, and it was funny to watch.
I tried to short that. I tried to short that too, and I got stopped out like 3 times, I think.
It's a disbelief rally, right? No one believes it's actually happening until it's way far gone.
Yeah, without a doubt. I got caught in the second one too. After the COVID crash, I was a shorter. I wasn't getting long. I got long after like 9.5K or something like that.
Yeah. So let's say, when do we put in the bottom, or like maybe a bottom print? I don't know. Let's say it's February, right? So then take what, 190 days. Maybe it does like this, or I don't know, 160. So you're in the summer of 2023. When's the halving?
In 2024. Yeah, 2024. Is it May? I believe it's May.
April, I believe.
Oh, April 2024.
Okay. So historically, when does Bitcoin start to move before the
270 days before the halving?
I don't know the math on that, but this is just how I would like look at the market, in the sense of like, there's no need to be in a rush here.
Okay, all right. I'm liking this. I haven't mentioned this before either. So the concept. So over here on the NJ show, we are very aware that the next major catalyst for Bitcoin is the halving, but we've never had anybody sort of come on the show and say what you've just said. So when does historically Bitcoin start moving? Are we able to look at this now? I think you've marked it out already. Yeah, you have. Perfect. Go for it.
Well, and this is on the fly, just thinking like, okay, like this is how I would think about all the things of like maybe a bottom is forming and when does the market start to move. And what is that? That can match up with monetary policy shift or like consecutive inflation prints lower. Maybe it's starting to show up in the housing market, or maybe the Fed's seeing the employment data they want to see. Like it's all going to match up somehow because this is all just a risk on trade unless there's some sort of new thing that decouples Bitcoin from the rest of the market. So that's why, like, honestly, to me right now, I'm doing a lot of just like looking around to see what is the potential time frame of when this can happen. We're also year end right now. Like a lot of people close their books. Like it's just low volume. So I'm not necessarily trading that much. I'm still very much in the charts. I also had a good run on the altcoins, and it hasn't really been the same as it was a couple weeks ago. But I do think on the short side, like the play that Zoran described, like getting a retest seems like a pretty good way to position and kind of just sit in it, right? Because like if it's truly a range, you're going back down to the range lows. And like if you go to high block right now, and I was looking at CHC because it moved, but if we look at Bitcoin and we run a analysis on the liquidity, and I don't know, do you want me to explain this to your viewer? You maybe have newer viewers. Like
Yeah,
we
for
could
sure.
go quick
For
here.
sure. Go ahead. The reason I get a little bit quiet when you talk is because you have so much stuff that I just never often see, and I'm one of the people in the
That's the
comments right now.
edge.
Yeah,
That's the edge, bro.
yeah. I'm one of the guys in the comments right now, just learning. I should probably like this video too. Like the video, by the way. Subscribe to the channel, bottom right hand corner. It takes a second to do, and it's free. Carry on, Iso. All you.
Yeah. So if we look at like where the liquidity is, well, let's step back. Not even look at where the liquidity is. Let's pay attention to this cumulative lick levels delta down here, and what is it telling us? So red, we're just going to associate with shorts because that's what they are. Green, longs. So we had somewhat of a buildup down here in this like 17K region, which Zoran was describing as like a consolidation area that I think he longed like the daily open or something like 17K. Yeah.
Yep.
And yeah, so, we talked about this. Price wasn't going down and you were building up shorts here, right? So 630 million, 430 million. At one point it was, I think it was like, 1.2 billion. And so this is telling you that people are like shorting this whole area. Price isn't going down. And I think it was actually showing up in funding on Bybit, negative, meaning like there were spot buying and people were trying to short it on perps. And so that creates kind of that scenario that we were discussing of like, a bottoming phase. It's the same, just on a lower time frame. And so this told us that shorts basically needed to get wiped out. And where they got wiped out was kind of around this like what 18. Oh, it actually went up here like 18.3, somewhere around there, right? Through the range high.
Yep.
And so you could start to see that as price going up, you can start to see the longs getting added. Fine, you got on 17.2, 17.3. It wasn't that bad, and you started to get up here, and sometimes this delays. You had 6.9 billion in longs on Bitcoin, and it's hard to catch like the exact top, but you could have timed it around like, okay, CPI and then just FOMC. Here are two big macro pivots where price typically moves around it. It's crazy whipsaw action. Basically had the 50 basis point print. Then you were up there at a peak level of 11.3 billion in longs. So one thing that I look for, Zoran looks for, we talk a lot about in Crypto Insiders and on Twitter, it's like, how do you exploit the party that's offsides? Well, here the shorts were offsides, they got squeezed. And now here you have 11.3 billion in longs, meaning longs were like way over their skis. And at that time, this ratio was way different. Like now it's not as favorable. That's why like getting into a position right now is not as favorable, because you've had a significant tail off in longs. Now there's 1.2 billion. So that from like 11.3 to 1.2, just on this drop down, you've taken out a lot of market participants. But you can still take out more, right? And so maybe you do go to that. Let's say I think mid range is like 16.8. So if you ran like this huge cluster, 145 million longs at 50x at 17K, or, or around here, like this, you get this cluster of liquidity around mid-range. Maybe it dips through it. Then you'll get a bounce because the chances are this is going to turn red. You'll get some shorts again, and then we kind of do this song and dance. You create a lower high, you squeeze some, people chase it back up, sells off, and it's just it's a giant game of liquidity. And like Zoran is very good at Ichimoku, which is something that works well in trending markets. And I learned that from him. And then when I came to Crypto Insiders and we kind of developed this whole thing of liquidity theory, we understood that this works very well in range-bound markets because this is predatory behavior. Low liquidity environments, you're hunting positions. Basically, we just saw the shorts get squeezed. Now we saw the longs get squeezed. And so the way we like to trade around that is you find your technical levels, range low, range high, and they typically match up with the liquidity, these bubbles. And when one side, longs or shorts, gets significantly off sides, you have a pretty high probability setup, right? And there's guys who do this like with just charts. The unique thing about High Block and the offering it has to me is like, I understand why price is going to go down and go up. Like you can see exactly like on a precision basis of like, where do I want to enter? I want to enter on these bubbles because I know that if you wick into here, like you're going to get people chasing this and vice versa on the range low side. Same thing, buying it, right? So it's been pretty good with Bitcoin, Ethereum for that matter.
This is pretty insane, bro. This is really insane. You've just literally offered a lot of people a route into trading. So what you were saying here was just to clarify. You're saying that if High Block need to sponsor you, by the way, it's about time because the way that you understand the way that you understand their platform is unbelievable. So what you're saying is you could take the concept of range trading, learn how to plot out support and resistance, and what you're doing is you're trying to make your support and resistance line up. Well, not forcefully, but if your support and resistance lines up with those liquidation levels, you'll know you'll have a higher probability and more conviction towards the trade that you're taking. Is that right?
Exactly.
Yeah, because you understand like price moves for a reason. It's not just this like random walk on a chart, right? Like it in certain areas, it has to get to certain areas on the chart. And how does it get there? Well, it needs to collect liquidity from the market, basically the sheep, right? The retail, and you have bigger players. Basically, their capital goes to the bigger players, and because they need to fill larger positions than most, right? And this is a lot of like the liquidity theory and things that we have come up with and kind of tried to build a system around it. And it's worked for me, and I think people who have adopted the system, they understand it, and it gives them just a better sense of confidence in their ability to analyze things, because price might have to go down before it goes up. It might have to go up before it goes down, and that's largely a component of taking out those players, like those bubbles that you just saw on the chart. And so it just helps me understand the trade more and staying in things.
So in layman terms, it's like when people say it's chasing for the stops, like hunting stops. Price. If you want to understand the direction that price is going in, just consistently look for the stops. Where are the stops resting? Where are the biggest stops resting?
It's looking at the stops in real time, though, right? So like you can look at the price action, be like, all right, this is a poor low, or this is a weird wick. It probably get backfilled. But like when you can put a tool like High Block and actually see the liquidity, okay, based on open interest and whatever other proprietary algorithm they use to identify, this is how many potential positions opened up at this price point. Well, this is the price point at which they liquidate and actually feel that pressure. You can actually start to add confluence to your technical analysis levels, right? So like technical analysis is really just a guide for us to understand what price has been doing. It's not for forecasting the future. But if we overlay some liquidation levels, you're like, all right, well, these are the price points at which certain positions that we know based on open interest actually opened up here. Where do they start feeling the pressure? Well, it's at this in this price point, and then you overlay that with technical analysis, and all of a sudden you have a lot higher confluence and degree of confidence in your ability to size up on a level because of that.
Yeah, exactly. You just have multiple points of confluence, and one thing is just like it helps me stay in the trade. I just understand why I need to be in the trade. Otherwise, like from a technical analysis, like yes, you can look at a chart, you can look at Fibonacci, but like if you really understand the movement of price and why it's doing what it's doing on a deeper level, at least to me, that it's helped me with the discipline in staying in trades.
This is going
which
to
I
be
think is
for
a
sure,
huge part of it.
for sure. This is going to be one of the most underrated episodes on the show, without a doubt. You guys,
they'll
seriously,
look back on it a few years from now and be like, "Oh shit, man, why wasn't I see this before?"
no, yeah, this is a really, really, really good show. There's a lot of crazy content that you guys have dropped. I mean, based on everything that you guys are saying, you've given us a real way to trade in this environment, and that's one thing that I wasn't expecting. For everybody in the chat who's watching, if you guys rewatch this video, you'll see that they've actually given you a big chunk of their edge. So pay attention, pay close attention to what ISO's saying and how it lines up with what Zoran was saying at the beginning of the episode. Very, very, really, really mind-boggling. But I want to know more. I want to know more. So, for instance, I'll throw one at you, ISO, here, right? A lot of the arguments right now, right, have been, my perspective was that it would be sort of towards the end of 2023, going into the beginning of 2024, that we'd get some market movement and some light towards the crypto sort of universe. But I can see arguments being made now for mid 2023 saying, well, hang on a second, the speed that Bitcoin is collapsing, if we see that 10 to 12K region and the macro bottom starts forming now or within the next couple of weeks or months, then there's no reason why summer of 2023 can't be where the low sits. Now, I kind of gently heard you mention mid 2023 as well. Could you give me a bit more context into that and why you think mid 2023 would be sort of closer to the bottom than sort of end of 2023?
Well, I don't know where it's going to be from a time frame standpoint. Really, like it's
certain things just need to unfold in order for you to start seeing. I get what you mean.
Yeah, I mean, you got to like see it in the chart, but you also got to just see it in look, there's this whole like thing, are we going to go into a recession? Is it deep recession? Is it a shallow recession? What's going to drive it? Like inflation is in the picture still. FOMC, like rate hikes, like it's in the picture still, but the cycle of rate hikes is like we're at the tail end, in my opinion, right? Like they hiked pretty high. Okay. So how much more the market trades around that? Sure, it's going to trade around it, but the focus is not necessarily like, are we worried they're going to jack it up so high? Because they said they're not. They need to see how data flows through the system, right? So all the data that we look at takes time to flow through, and that might not start to show up until the spring, right? So the market's going to move before that, but the main thing is GDP growth. If you have a sustained rate that's higher for longer, I kind of like was saying this last night, just like money was free for a while, and so it was easy for things to go up very fast, right? The QE versus QT, right? So that's going to impact multiples in earnings going forward for stocks. So I had said this in the past, like you're going to hear something like the market had a lower inflation print and 50 basis points, then like why did it sell off? If that was like bullish, right? It's because equities need to be repriced already because they just ran 20%. So the multiples come down, margins get squeezed. I mean, there are layoffs. Like that's not like a meme, right? So whether or not like this fully materializes into a deep recession, the shallow recession, or maybe it just becomes like we meme it into a recession because it's gonna just everyone's talking about it and there's literally fear around it. I think that like that has yet to play out. If you look at bear market cycles, like you get a rate hike cycle and the tail end of it is typically recession. So we're just kind of finishing this whole phase, and I don't know how long it's going to take, but I know that like crypto is not going to go up in the face of it. And if you look at a chart like ES, like if that was the lower high, then maybe over the next 3 months you trade down to 3,200.
Okay.
That would get so like that's the 61.8 fib of the move, right? Those just technically speaking. And so crypto is not going to go up in the face of that. And if it's a slow bleed, and the dollar can going up can be a component of this, even though like 115 could have very easily been the macro top for the dollar. We can just basically make a series of lower highs. If you're making a series of lower highs, you're still going up. Those moves in FX will be reflected in risk assets. And so if the dollar starts going up now, you're going to start to see equity sell off, I think, like we have. And then you're also going to start to see crypto bear the brunt of that.
Okay.
So
fair enough.
It's just very much technical liquidity driven trading, short time frame type stuff until we are in some sort of consolidation, phase at the bottom. And we talked about the reasons where we could start to see that, but like it's not there yet.
Well, I've got a question. I've got a question for both you and Zoran then. So over the next sort of 3 to 6 months, do you think that the Fed can do it then? Do you think that they can? I think they've got a target of 2% for inflation. I think that might be a little bit of a stretch, but do you think that over the course of the next 9 months, do you think that they could do it? Do you think they could get inflation to 2%?
No way in hell.
Yeah, I don't think so.
I don't think so as well.
I personally don't believe so. But I will say
they'll probably move the target. Yeah.
Yeah, true. But I will say to the point earlier about can crypto move in the face of recession? I'm going to be the contrarian here and say absolutely, just because this market moves, in my opinion. And again, I've been forged in crypto. I never traded equities, legacy, etc. And it's good to have ISO on my team because like he's the macro guy that understands shit much better than me. But as a crypto native, I think Bitcoin and crypto as a whole follows the cycle theory. So like, can crypto go in the face of recession? I think it's irrelevant in the sense that Bitcoin and crypto will have its own cycles irrespective of what the Fed and macro are doing. I'm not necessarily saying that it'll be a full-blown bull market, but I think you can have decorrelation even in the face of a recession.
Fantastic.
Yeah, I mean, and that'll come up. That'll be whatever narrative that comes out of that. I don't know.
There'll be some narrative to be like, why is crypto moving? Is it the store of value? Or is it this? Is it that? There'll be something.
Agreed. And just quickly as well, you guys were mentioning earlier on, historically, when does Bitcoin move? And I think you mentioned 270 days before the halving. Was that correct?
Correct. Yep.
Okay. All right. So, in 2018, we had the dip into 3K, right, for Bitcoin.
Yep.
And we then pushed up. I think we pushed up all the way to something like 9K or something like that. And then we dipped. Was it COVID? I think it was the COVID event that dipped us back into 4K. Is that correct?
Correct. Yep.
That was still, when you look back at it in hindsight, that was still bullish. It was just a higher low, right?
It was an extreme higher low saved by Sir Arthur Hayes. Yes.
Yes. Okay. Awesome. So say for instance, with COVID being an event driven crash. So we might not get that exact same crash or that exact same type of price action in the near future. But if we start forming that base at 10 to 12K, and let's say, for instance, it's been like a month and a half, nearly 2 months where Bitcoin hasn't moved. We're just in that 10 to 12K area. It's difficult to trade it via ranges. It's difficult to do anything with it. It's just quiet. Would you start buying it?
Absolutely, in the sense that if I was an
Yeah,
investor looking to buy spot, I don't necessarily think it's wise to enter derivative trades without
Yeah,
confirmation. You can't sit in that and pay funding, or I guess you could buy some futures, or start nibbling on futures and backwardation. That's probably your best bet. But taking just straight perpetual swap trades is probably not the ideal thing to do in a boring range, because that's exactly who they're chopping up. It's you
yeah,
joining
yeah,
the
yeah.
grinder.
Yeah, yeah. So you'd happily pick up a bag on spot. Okay, cool. I guess I've got more controversial questions that come up from here at this point, I guess. So if you was to buy a bag at 10K, would you sell it at 100K? I'm sorry, I'm joking. I apologize. But how high do you think we could go? Do you think the cycle high would be the target of 69K, or do you think that Bitcoin actually has the potential to go higher?
So
no, I'd
I'd
sell the echo
personally
bubble
sell
rally.
the echo bubble. Yeah, I'd sell the echo bubble rally and just count my
Okay.
chickens and then wait for, I guess, the macro bottom, whatever that is.
So the next focus at the moment for you two at this particular time is going to be the echo bubble. As we go into 2023, we're going to be looking for price action similar to 2019, where we sort of found a bottom, we rally 3-4x off that bottom, and then we stabilize until whenever it is that Bitcoin wants to start picking up. Is that the plan?
Exactly.
Okay, all right. Now, I noticed that you've got Solana on your screen here, ISO. If we're going to get an echo bubble rally or a bear market rally, whatever anybody wants to call it, then I imagine if Bitcoin's going to go up for 2, 3, 4x potentially, I imagine there are some altcoins that would follow through with it. Would you agree?
Absolutely.
Yeah, there definitely will be. I was just looking at Solana because I was looking at this coin and um, obviously GCR posted about it. It went up, and then I started looking at liquidity, and I honestly wanted to short it yesterday. I had like an order in at like 14.89. I'm not kidding, but I didn't because I was like, it looks like I could just like do something stupid, but it didn't really take these highs. But so I figured I would draw this out to see like how I would be looking at Solana going forward, and like how this level down here could be interesting from a liquidity standpoint of potentially longing it. And this is an idea. I don't know if it's going to work, but it was something that like I think would be a good thing to walk through with people. So
Okay, go for it, man. Go for it.
so you could say that this is a range high at 1490, right? And like when I was looking at it yesterday, the top lick was around like $15. Um, Obviously, these things come in after when new positions enter the market, but um, so it basically went up to like 1480 or somewhere around there. And if we look at kind of these highs, um, just like Bitcoin, we kind of like are at the range high. Let's call it that. And you could say that this is like the range low, and this will be your kind of liquidity grab deviation, whatever you want to call it. But I would focus on this 1490 to 1280 kind of zone here, and then take the midpoint and say that we're at kind of like this 1390 area, right? So then if I'm looking at the chart itself and I ask myself like, okay, like there are 87 million longs still in Solana, and at that range high, there was 276 million, right? Goes back to the offsides theory. And down here, the market was pretty short, 78 million, and we were trading 1277. So, okay, like here's your range low, and this is what we just talked about. Like people were shorting range lows, right? This is support. Like here's your consolidation zone. We bounced off of there, and we took out pretty much all the shorts that were building up, ran up to our range highs. So now we're sitting at the midpoint right now, and if you typically the midpoint is going to be like kind of split on this short long ratio of like 400 longs, 200 shorts. It's not that favorable in the sense of like one party is significantly over their skis, getting too excited. But if you were to come down and let's say you took out like all of the liquidity and you started trading like 1260, maybe you're starting to trade 1250, this is going to rip all the longs and then you start to build up a red delta, it's kind of interesting because it matches up with, you take out all these stops on this range, you would basically be retesting like the big range and this deviation. So you have like, you're essentially, you're under, over, retest. You can think of it that way, but it's also a key Fibonacci of this move to this move. So that's something that I would potentially be looking at maybe on the long side if we came back into this zone for Solana, even just to trade a bounce back up to mid-range, maybe 1390. Because you know that if you get down there, this delta is likely going to flip and you're going to have all these longs get taken out. While you would still be maintaining, you know, keeping this this low as a trade idea. So just something I was looking at and thinking about for Solana trade. So we'll see how that plays out.
Amazing. Thank you, bro. I really, really, really appreciate that. It's an interesting look when looking at Solana. And I've got to be really honest with you, having high block as a tool in the background, I've got to say it really changes the way that even I'm looking at things. I'm wondering if I should get a membership for high block as well. Because no, I'll tell you why, because I love looking at ranges, right? I love the less noise, the better it is for me. I don't quite like indicators. I like the stock RSI, but I don't like using indicators too much. I feel like that gets in the way of how I process things. And I actually went short yesterday and I closed off earlier today. It was profitable. It was all right. But looking at high block, I think that I could even refine and retune the way that I look at things. And I'm sure a lot of people in the chat are thinking the same as well. I'm seeing some comments here where there are some people who actually want to sign up. How did you get into high block, ISO?
I honestly don't remember, but this is really interesting because like 19 to 10 is your range, and you're at the mid. So you have two mini ranges pretty much here. But this
I'll
is the
give the
giant
answer
range.
there, NJ. So High Block was someone that actually approached us in Crypto Insiders. His name is Shub, great guy. I think we're actually getting dinner with him tonight, me and ISO. But yeah, so a lot more to come there. But yeah, so he was actually in Crypto Insiders and was one of the members there and still is, I believe. And he reached out to us and said, hey, we have this, I'm building this tool. Would you guys want to look at it? And like ISO and I looked at it and we're like, holy shit. This is literally what we've been talking about. And as we were kind of building the tools of the trade liquidity theory course, it was like such a perfect thing. We're like, hey, let's include how you use this tool in our curriculum. Because again, yeah, you can know everything about liquidity theory. It's great, but you also want to know how to execute on it. So yeah, we took the time, we spoke to High Block and we kind of partnered up with them. We actually also have the highest discount available as an exclusive for the Crypto Insiders community, but that's a separate section. But yeah, so High Block reached out to us and we kind of met with them. We had a couple of calls with them and we actually formed a partnership. And it's just an incredible tool. And what they've done is pretty impressive because they've put basically the execution aspect to kind of what ISO and I have been speaking about for a couple of years now. And like you said, NJ, you know, it would help you looking at and kind of refine your execution. And, you know, in this business of trading, execution is everything, right? Like execution is your bottom line, it's your P&L. So if you want to be able to size up and execute with a higher degree of confidence, especially with leverage, right? Because that's most of the time what most people are doing. They're trading perpetual swaps on leverage. This tool gives you the ability to, with confidence, size up at certain price points and know exactly where you can put in validation too. So it's not order flow, but it goes hand in hand with order flow. So it's just another tool to use basically at your arsenal.
Amazing. And I think that's that's where people sort of start looking at it and start getting a bit too hopeful. So, you know, just to recap, what current environment would you say that we're in? And what would you advise people to do? You know, a lot of people, let's be really honest, they're here they're investors and they're not traders. Now, a lot of people on the other hand, on the other side of that coin, they're investors who want to become traders. Now, if you were new to this game and you saw this episode, for example, and you saw High Block and you saw Rangers, what would the best way to start tackling this as a new trader? What would you advise them?
You want to answer that, Isa?
You can go. I mean, look, my Twitter and Crypto Insiders is like Zoran too. Is like I'm not trying to scam anyone. I'm just like literally sharing my knowledge because at one point I didn't know shit. And so like I think crypto is a really unique industry in the sense that you can access information and people in a way that I couldn't when I was working in financial services. Like you can't go talk to a portfolio manager or, high profile trader and get his ear. But I think I think there's a lot of communities that like people share the same understanding and like they're putting ideas out there and being able to filter that. But one thing that I've always tried to do is just like, these streams, like answer as many questions as I can, is just be a sponge of information and pick up things that you find interesting and then dive into them. Like I did Elliott Wave starting off really early and what did it do? Nothing really for me. I mean, it's worked sometimes. It works in a bull market, but my knowledge of fibs came from Elliott Wave. So I incorporate fibs, liquidity, SR, all that stuff. So yeah, like we have this thing called tools of the trade. Like it's very much like here are the tools that you can use to build a trading system and a foundation for whatever you want to use going forward. There's no right or wrong answer. So it's overwhelming at first. Like people watch a stream, they're probably like, what the hell is going on? But I just would encourage people to ask questions. And there's so much free information. There's so much information in the space that you can pick it up quickly if you put in the time and dedicate the time needed to like kind of hone your craft and figure out what kind of trader you want to be. Right now, it's very much range trading and liquidity driven. It's super technical, and if you can learn to do that, then trading a trending market with some patience is going to be pretty damn nice. Because this is like a very short-term trading.
This is what makes you
landscape.
perfect your execution, right? Again, you have to play level to level, and this is like one of SE and XO's tenets, right? You're trading level to level a lot of the time. You're in and out, and you have a target. You don't like reach past the mark. In a trending market, you kind of have to adapt, right? So like this system is specific to range-based trading. I wouldn't necessarily use liquidity theory in a trending market other than looking for entries along mean reversion. But then again, that comes from, in my opinion, trending indicators like Ichimoku, where you know where mean reversion is. Let's say the Kijun, which is a dynamic 50 fib. But you learn, if you're just a new trader and you're trying to figure out where do I fit in the stack, play around in this range. But if you feel that it's just not comfortable for you, or you just don't have the time to dedicate, that's fine. Some people have bread and butter being in ranges. Some people have bread and butter being trends. For me, the longest time it was trends, and I've become to adapt, because you have to adapt, right? It's adapt or die in this space. So trading trends is a little different in the fact that it takes a lot more patience, like Trip said, and you have to have the conviction to hold positions for longer. You're not playing level to level. You're basically trying to capture the majority of any given trend that you can at a time.
Amazing. So you guys, one more thing that I noticed is so let's take it in the order, right? So in the order, it's you guys have a crap ton of information that you've shared a lot of on this stream, tip of the iceberg. And then on top of that, we've got all these tools and we've got all these questions that everybody's going to want to ask. So the next question I've got for you is, can you tell us a bit more about crypto insiders? Maybe one of you could maybe share your screen and show us a little bit about what crypto insiders are, and what we can expect. Maybe if I was new to this stream, and I'd be looking for one of you two. I'd be looking for Twitter. I'd be looking for YouTube or whatever. Maybe if you guys have any resources that you use.
Yeah, absolutely.
Yeah, Zoran can take over this one.
Sure.
Yeah.
So Crypto Insiders, man, I love it. This is a community. First of all, it's free. It's not a paid group. It's 100% free. It will always be free, and I take pride in that. That's how also I met some of my best friends in the space, like Crypto ISO and other people. And it's really just a free community of like-minded individuals, whether they're traders, investors, even developers. We've had some hedge fund managers in there, some venture capitalists in there. It's really a hodgepodge of people, all who are crypto enthusiasts, who basically want to share their opinions about the market, ask questions. A lot of it is literally question-based analysis. So people will ask ISO or me, like, how are you seeing the market, or why did you take this trade the way that you did? And we'll do like a little recap, basically breaking down why we took the things that we took and how. So it's kind of like an open classroom, I think is the best way to describe it. I guess we can share the link. It's t.me/crypto insiders. We can share the link afterwards on our Twitter pages, etc.
Yeah,
But
100%.
the best way to think of it is it's an open community to share and ask questions. I take pride in it because it's controlled chaos. People in there, even without ISO and my input, just self-police. People are constantly sharing charts. People are constantly asking questions. Even memes occasionally, of course. And it's really just a place for traders and investors to kind of find a community from which they can kind of speak to one another, right? So I think the biggest problem I had getting into the space is I didn't know where to turn. So for me, it started on Quora, asking people questions about crypto, people answering me, and then people saying, "Hey, can we like talk somewhere else, like in a more like chat-based setting?" And that's where the idea came from. So I started Crypto Insiders October of 2017, and we were on Slack at that time. And then 2018, we transitioned to Telegram, and that's how I met Crypto ISO and everyone else. And it's just been a journey since, man. We've never I've never spent a single marketing dollar, and over the years, it's just blossomed to like 7,000 people. So yeah, anytime anyone wants to get a better hold of me or Trip, come into Crypto Insiders, tag us in a post, ask questions. Even if it's not us answering, people are more than willing to help each other, because one of the big tenets is, teach a man to fish, he eats for a lifetime. And that's really the goal, is to teach people to trade for themselves, to think for themselves, to form thesis on yourself by yourself. You can copy trade people, that's fine, but at the same token, you're not going to understand their system, their risk parameters, or why they're taking the trade. So you at least have to take the time to think about why you're doing something and do it in a way that makes sense.
Bro,
Yeah, pretty good
absolutely.
summary.
Yeah, absolutely phenomenal. Every time you talk, it's I start losing myself. Do you know who else does that to me? EXO does that to me. EXO comes on this show. He comes on this show, and I've got my host hat on. I'm doing good. I'm like, EXO, how's it going? He starts talking, and then I start drooling a little bit, and I just start listening. And an hour in, I forget that I'm hosting a stream, and I'm getting the same vibe from you, Zoran. So GG.
Appreciate that.
You know what? You know what would be interesting? It would be interesting if you and ISO had your own show. That would be really interesting. Maybe something
Would
Uh,
it?
maybe something to consider for the future, eh?
It might be.
Maybe.
What do you think, Kaiso?
yeah, I've always thought about it. So hopefully we'll have some surprises soon.
Definitely. I know that you are ISO. You're very, very loved in my community here over in the NJ show. Everybody has good things to say about you. And now, Zoran, we've got you on that list as well. Now, just before we wrap up the episode, I do want to ask one final question. And I know I've been bombarding you guys with questions nonstop, but one question that we like to ask here on the NJ show, I've asked you once before, ISO, and I'm going to ask Zoran this as well now. Will you be back on the NJ show?
Oh, with absolute pleasure and certainty. And I want to tell you, and here's when you're going to have me back on. You're going to have me back on after we do this 90-day period of consolidation. And I'm gonna tweet at you, NJ, and I'm going to tell you the 12-hour edge to edge is set up. It's time to have me on, and we're going to have a bull market of a show for you.
100%. I'm looking super forward to that. Brothers, what can I say? Absolute pleasure having you two on. Insane amount of knowledge coming from both of you. The community here, unfortunately, we haven't been able to have the comments up live, but the community here have been saying really nice things about you guys, and I've enjoyed it too. Thank you so much for coming on. We really look to have you, really hopeful to have you guys on again soon, sooner than later, if anything. And stick around, we'll speak in just a few minutes. Is that all right?
Awesome. Thank you so much for having us.
Thanks, guys.
Cheers.
Take care.
Cheers, bro. Cheers. And there you have it. Those are two people that I really respect. Two people that grind in the trading game. And the best thing about it, the best thing that you can take about this, away from this, is that they're normal. They're just like me and you. The only difference is that they put the work in. They put so much work in that they can have very nonchalant conversations about things as intricate as the convos we had today. So look, share the video, like the video, subscribe to the channel, bottom right hand corner. It takes a second. Don't forget that this episode is sponsored by Binance. We've got 4 days left now until the mystery gifts have been all distributed. So if you sign up using the link in the description, you will get a CR7 Cristiano Ronaldo mystery box that will immediately get deposited into your account if you sign up using the link below. And this offer, I think, only expires in, hold on, Yeah, so this offer expires on the 19th. So make sure you guys are doing that as well. And until then, we'll see you on the next episode of the NJ Show. Cheers, everyone. Have a lovely, lovely day. Have a lovely weekend if I don't see you tomorrow. And make sure you smash a like on the video, all right?